Welcome back, everybody. You're tuning in to howtoPlayStock.com. My name is Kepley, and today is Wednesday, August 31st, 2016. Today's video, I'm going to cover dividend yields, and I'm going to explain to you just what to look for when it comes to investing in companies that pay out dividends. And it's really important that you look at the dividend yield. So getting started here, basically, what you're going to look for are companies that pay out dividends and categorize those according to high risk, medium risk, or low risk. Okay, and the way you do it is by looking at the dividend yield. Now, the high risk dividend yields usually will yield 5% or higher. Okay, and an example of one of those, and these are high risk again, an example of one of those companies might be like Oil Trust. REITs are another one. And then you have medium risk companies, which usually have a yield of about 3 to 5%. Okay, now these are usually large cap stocks, and they're companies that have been around, for 50 years, 100 years. Usually they've been around for a very long time. They're very stable, and they've been paying out a dividend for pretty much the entire time they've been around. Okay, now these, again, are medium risk. They have a dividend yield usually of around 3 to 5%. And the last one is low risk. These are stocks with a dividend yield between 1 and 3%. Okay, now an example of those would be like utility stocks. Utility stocks tend to do good whenever there's downturns in the markets, just because it's kind of a safe haven for your money. If you think about it, utility stocks are, they provide power and energy to your house, so it's something that's really not going to go away. Okay, I like utility stocks. I've made some money with them in the past. I've actually, if you're looking at doing longer term trades and you're a day trader, utility stocks are a good one for that as well. But that is your dividend yields, and that is how basically I break my companies that I look into for my income investing strategies. This is how I break them into high risk, medium risk, and low risk. Okay, because an important thing to do when you're doing an income investing strategy, especially with like your portfolio that holds dividend stocks, is you want to diversify across the board. So you want to hold a little, some companies that are high risk. You want to hold some that are medium risk, and hold some that are low risk. Okay, and diversify accordingly. We're going to go in here in a minute, and I'll show you how I look at dividend yield stocks, and how I basically screen them so that I can break them into these categories here for you. And we'll go into my Google Finance account. I'm going to go ahead and show you how I do that, okay? So stick around, and I will see you in the next video. Okay, so we're in my Google Finance account, and right now we're looking at a list of stocks here that I've went ahead and I usually watch on a pretty much a regular basis. These are companies that I've had an interest in the past, but just to show you an example of what I was talking about with dividend yields, in regards to looking at high risk stocks, medium risk, and low risk stocks. We'll just pick this first one here. This is a utility stock. So if we look at the stock here, what you want to look at when it comes to your dividend yield is this little section right here. It says dividend/yield. Basically, this will be your dividend right here at 31 cents per share, and then this is your yield right there highlighted. It's 2.25%, and that goes right along with what I was showing you in the first part of the video with low risk stocks. Utility stocks are a great example of low risk and usually have a yield between 1 and 3%.
And as I'm showing you right here, this is 2.25%. So it's in between the 1 and 3%. This stock right here is actually a really good one. Right now, just looking at it though, it's approaching its 52-week high. So I actually got out of this stock not too long ago. I'll jump back in it, but I'm going to wait until it hits more around this price here on the 52-week low. These are just a few things that I look at when it comes to investing in dividend stocks that pay a paycheck. So I'll look at the yield, the dividend that it pays out per share. I'll look at the 52-week low and high. Also look at the PE ratio. The PE ratio on this one, as you can see, is a little high, mainly because it needs to come down in price. So we'll just go back here again. We'll look at another stock here. This one's a real estate investment trust. So if you were ever looking to get into real estate, this is one way to do it. This is a company called Whitestone. Now, if you look at the dividend yield on this one, it's high risk. So you got a dividend yield of 7.89%, pumping out 9 cents a share, and a PE ratio of 42.48. 52-week high is $16.30. Right now we're at $14.44. So it probably could go up a little bit more. And I actually am using this one in my portfolio as an income investment strategy. However, just looking at it here, I decided for right now, because of the PE ratio being 42 and it being towards its 52-week high, I'm going to hold off on investing in it. It is pumping out a dividend to me. So what I'm going to do right now is just let the dividend buy up more shares through dollar cost averaging. So I'm not spending my own money while it's up towards its 52-week high. I'm using their money to basically reinvest and buy up more shares for myself. So it's just a strategy you can use so that you're not investing at high prices, because a lot of the problems that people have when they're investing is it's all about the price you pay. If you're looking for good returns, it ultimately comes down to the price that you pay for what you think the value is of that stock. So just looking at this right now, I would say it's overvalued. Just based off of the information that I'm seeing here. So I'm going to hold off on investing. I'm already invested, so I'll just use the dividend reinvestment to buy up more shares for me so that I don't have to worry about necessarily losing my money, if that makes sense. So we'll go back here again. We'll look at, let's look at GNC real quick. So GNC has got a dividend yield of 4.04%, and that would fall into a medium risk. And like I said before, medium risk usually consists of large cap stocks. GNC is a large cap company. They're worth $1.36 billion. They've been around since like 1935, so they've been around for a while. They have a good PE ratio right now of 7.29. That's under 10 to 14, which is fair value. So this is actually, just looking at it, I would say it's probably undervalued a little bit. And if you look at the 52-week high, 1892, it's at 1981, so it's towards the lower end. And those are things I look for when I'm investing in companies, especially if I'm going to be using my own money. It does pay out a dividend of 20 cents per share, so this one right now, it would probably be a good opportunity to buy. Because the name of the game, again, guys, is you want to buy low and sell high. especially if you're looking for like long-term trades. And then if you're looking for income investment strategies, you still, if you're using your own money, the only time you really want to buy is when it's at lower prices. So if you buy low and then you ride up your stock price up to its 52-week highs, once it starts approaching like 52-week highs, just save your money. There's no need to invest more. Just save your money and let the dividend do the investing for you through dollar cost averaging, and then wait for the dip, and then buy on the when it starts coming back down in price. That's a good way to increase your returns over time. So hopefully this information is beneficial, and you're able to see kind of how I'm looking at stocks, that come up on my radar a little bit. I use some other tools too, like the debt to coverage ratio. I go into financial statements. I look at all sorts of different numbers, but this is kind of where I start my research, is by looking at this kind of stuff, and then I can kind of, from there I can screen them a little bit and say, okay, this one's good, this one's bad, and then weed them out that way, and then dive deeper into the financials, like price to earnings ratios, balance sheets, income sheets, stuff of that nature. So that's all I have for today on dividend yields and looking at stocks through Google Finance. You can do the same thing on like Yahoo Finance or any of these others that present this kind of information here that you're looking at that I have highlighted. You can do the same thing. It doesn't matter who you go through. It's all public information. The other thing I like to do sometimes is read up on some of these articles on the far left, because they'll kind of tell you what's going on with the company. It's good for some things. I mean, I kind of take some of this stuff with a grain of salt, just because some of these people that are writing these articles are, they're nothing more than journalists, a lot of them. Some of them, occasionally, that write these articles are invested in the company. So if you can find some articles like that, you can pay attention to those, because normally if the person's invested, they have a little bit more interest in providing evidence and proof in what they're talking about in their articles. But again, that's pretty much my research that I do on dividend yields and looking at dividend type stocks for high risk, medium risk, and low risk, and determining just what category those stocks fall into. If you have any questions or concerns, leave comments in the description below or in the comments section. You can also check out my website. I've got links in the description below for those as well. You're tuning in to howtoplaystock.com, and remember guys, income is the outcome.